Good morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How's your week?
Really good. It was mostly puts for me as far as trades go, just because that was what was there, and I always never get, never quite get all of that. And the one yesterday, yeah, app. Um, so I did I sold it 540, and then I got back in for a couple quick ones, but it's one of those where the thing went 300 to 1500, and you sell it, and some people might look at that and say, oh, you left 8 grand on the table for one stupid contract, but I mean 17% drop on a Friday is not really normal. So yeah, it just any one of those little rallies there could have just come back to entry. So that was crazy, but I don't do a lot of that these days, but sometimes there's days like that. So it's pretty good.
Nice. Driver was really good all week. I mean, Driver was fucking pretty much right down the middle. I was 260 most of the time. Everything pretty good. Putting was great. Chipping was supreme. But man, them mental shots. A lot of them shots you just get, 130, 120, maybe even a wedge in, and you just shit the fucking bed. And down there's some places if you shit the bed, you end up in a bad spot. And that's it's kind of how trading is too. You do all the work, you get to the moment in time, and sometimes you just fumble the bag, and kind of why I play the game. But back to the real. Not much for me except for Netflix. It felt like I lost a month of news, man. I don't know what the hell is going on there, but
Yeah.
a lot. If you're casual, and maybe I'm biased because I'm in it every day, 4 a.m. to maybe let's say 11, 10, 11, do the little gym, come back and check everything and do that every day. But you check out, you only check in once a day. I don't know how you have a fucking chance with keeping up.
Yeah. Yeah.
Netflix bought some silver, gave back all of January, and here I am.
Yeah. I don't. It's hard to really wrap your head around some of the market moves in terms of percentages or whatever. But I will say that one thing that has worked for me was the 620 QQQ idea, where it just keeps returning to that level. And if you need to hedge or want to hedge, said it weeks ago, you wait for the spikes over 620. You just buy the 620 strike for however long you want to pay for it, and then comes back, you get out, you do it again. There's going to be one of these times where it leaves 620 and stays gone, and then those puts are done. But that's what they're there for. I mean, the idea is the whole point of a hedge. You have to make sure that you make money on the upside, or you're not hedging anything. So, but that's done well. I've seen a couple people follow that one. On the metals, and silver in particular, um, we talked about how you get some pretty extreme percentage moves when given where it is. I mean, you don't even have to know TA. You just look at the chart, and it's like, yes, it can give a lot of that back. What? Hang on, sorry, I'm in a different browser here. But it can give a lot of that back, and I don't really put a lot into. Let me do this real
I
quick.
got you off screen. You're fine.
All right, yeah, okay, yeah. The trading view just makes you update. You're not a broker or whatever for every once in a while. All right. So anyway, the you can go back to me. I don't really put a lot into things like this is the biggest percentage move in 30 years or whatever, or I guess this one was 1921. But you just zoom out at all, and you kind of look at where we are. And the January move itself was extreme. The moves down, are sometimes tend to be faster when you're retracing and all that. But we were talking about having a plan to get out of silver and sell, and even if you got sloppy with your entry or your exit on some of those miners, you still should be pretty well up from where we were. So I don't. I guess the people who bought it 100 can go ahead and, panic, but there's a reason we didn't do that. I guess is what I'd say.
Man, feeling like Superman versus Bitcoin 123, silver 125. Um, it is a little bit. It is easy TA. I think you nailed that on the fucking head.
Yeah.
I can't haven't really wrapped my head around why. But I know the game, the stock game out there, and it's someone was caught off sides. They cover. When they cover, they stop buying at that high price, and then it goes back to reality. And I haven't seen a chart like this since the penny days, and silver shouldn't look like a penny chart. Um,
Yeah.
but I was hoping to have the conversation this week. Like this is probably where we'll go back to, thinking we would have a little bit more time. As a trader or a trade, kind of touch on what you said there at the end. I'll use AG as an example. You probably even do it on this chart, but if you just look at the monthly candle, you're same spot you were at the start of the year on a lot of those
Yeah.
charts. So yeah, I mean, as far as like worrying about people being bagged, if you're bagged right now in anything in that, you're an asshole. And I say that with Bitcoin too. So
Yeah.
um, just back to reality. I don't know exactly what level I was gonna say. I'm not. I mean, I'm not gonna lie to you guys and say, oh, I was gonna say this, but I just hadn't got that far ahead yet. The move, I think that's the topic of the hour, or the focal point is how fast it was. That is a bit of alarming, and not in a equity, but when it's a commodity, to see something
Yes.
like that.
No, definitely. And I mean, it probably, with Bitcoin when it spiked over 100 and did all that, I was thinking like, 88, 92 would be where it would park for a bit, make a decision, and and then it's gone back down. Bitcoin, were not that been a long time since Bitcoin lost 30% in a day, but um, one one thing I would say in terms of its we talked about how 50% losses over of Bitcoin from its high is just kind of what it does, and a lot of that has to do with just hunting for leverage and hunting for liquidity, and they just kind of keep doing that over and over again. Silver, the one thing I'll say about about this move on its way up, you started to see a lot more leveraged derivatives show up with silver, like new ones, and when that happens, it is usually kind of a top signal, and it's time to kind of think about getting out. I mean, I even saw they did that with MDB towards the top this last time, where all of a sudden here's this 2x MDB fund, and those themselves don't have really enough uh, size and volume um, to move it in and of themselves, but it is kind of a sign, and it is really I think you have to understand um, leverage if you're going to get into it, and probably just should not. I honestly think that hopping in and out of options, as long as you don't get in the habit of holding things to zero, is can be a little bit safer than a big share position in one of those leveraged ETFs. I've said the same thing about about natural gas and all of that, and the silver move. I mean, more so than Bitcoin, does remind me a little bit of natural gas when it gets overheated. So yeah, I don't know. I'm not anxious to jump right back into it, but you know, you think mid candle, you see a candle like that, you start thinking mid candle, and I'll start to look for what takes shape and flow after that.
Yeah, I forgot what the gas price was or the oil price was, but it was over 100 at one point in time, and I remember the natural gas being at like 9,
Yeah,
and
yeah,
silver 125 kind of just fits the same thing, and The first thing that I think about, I mean, it's not healthy. We've talked about that in every step of the process. That's not good for the market, the world, the economy.
Yeah.
Getting rubber to hit the road, as we always say. It's not good for that. You want that slow growth. So like knowing where you are in the game, that's usually important. But then the ratio works both ways, and you start getting 5, 8, 10% move on silver in a day. It can 3 to 1 the other way, and you have to be ready for stuff like that, or anticipate that when volatility kicks in. I think that's one of the biggest lessons here.
Yep.
Zooming out even more, I pulled up AG. Man, if you've been in here last year, it was huge. This time last year, yeah, I was telling you guys to buy it for yourself at Christmas. So I always like throw those kind of little reminders in there so it just sticks. But 5, $6, even at 8 at your last call, this pullback, you're still, let's just call it 3x from where we were. Well, we were buying silver at $26 back then. That's still 3x. So I mean that math worked out
Yeah.
still. From a share standpoint in here, so I mean I'm not panicking or anything like that because I still don't think the numbers have came out for them. But I mean, if we get a slow bleed back to the 50s on silver, that's going to be a different ball game in these charts. So I'm trying to anticipate that instead of panic or worrying about did I just miss the high point here or whatnot.
Yeah.
'Cause, I mean, it's just how I play the game. So
Well,
I'm anticipating a lot of news, a lot of FUD this week. Everything from that stupid J.P. Morgan was the whole reason, or China's got alchemy. I'm really looking forward to dissecting that, so I know where I'm going to go through all the noise.
yeah, as a I like the alchemy ones as a medieval literature guy. Like that was a big that was a big topic back then. So it's funny to see the alchemy FUD come out. But yeah, I one thing with silver, I always think about this concept of physical delivery of silver, and you know the vault with the bag of rocks or whatever. And that isn't really something you see with oil and gas. Oil and gas, sometimes the problem is it gets um, it gets too cheap and it's not economical to move it around. And that's the only time to me that the oil price um, becomes a real problem, is that you don't want the midstream people to shut down, and the pipeline people and this oil services and all of that. And one of the reasons I've been bullish energy is because the opposite, that all those midstream people are um, really getting active in flow. So one of the things I told people, I said last week, and I think this is going to bear out, is if you're going to stay in metals or get in metals, you have to know what kind of company it is, and you really do want them to have kind of the middleman side to them. You don't. I don't think you just want uh, a pick in the ground, owning 3 or 4 mines, and taking it out of the ground, because they, like the pure Bitcoin miners, um, they're gonna get hit pretty heavy on the pullbacks that are gonna exceed what's happening in the commodity. Whereas services, for lack of a better term, tend to have more staying power. So anyway, the so that's where I do think you want to be careful. And if you are going to be in a pure miner, uh, you kind of want a pretty diversified big one, and that AG fits that category. So if you're going to do a miner, get the Rolls Royce of the miners, and just be careful about some of the smaller ones that you did really well on. You go ahead and get out of those. And so this is where there is a Bitcoin parallel. The shittiest of the shitty miners, you exit them quickly. The Rolls Royce of the sector, if there is such a thing, you can stick around in those. And it does depend on your entry too, of course. But I'm with you. I mean, I'm not looking to just sell everything silver, but you just have your exit plan and a reason to stay. And as long as you do that, I think you're good.
Yeah, definitely. I wasn't here last week, so you can get a lot of Unc bullshit this week because that's all I got. I ain't going front. um, but it's spot on the chart, and you gotta take the information in. What you have. If you're a 1 day guy, you don't got a lot of information but the spot on the chart, and maybe guys like us, what we kind of say. So take that at face value and stick to that plan. I'm listening to you from me, and I'm like, P, I already know what I'm doing. I mean, I made that decision a while ago, so
Yeah, yeah,
I'm just gonna stick with it and manage those stops as I see fit. And I mean, 3x is fine. I mean, you got to figure out a note here. You got to figure out what the cost is and then what the return of investment is on where you put your mental capital. And being 3x up for me in a year, it doesn't stress me out that I didn't get the top. It just doesn't.
yeah,
And if you want to start on the front side of it, you're great. We'll use you as an example here. It doesn't bother you when you're buying if it keep going. I mean, you literally love buying shit cheaper the next day. It doesn't bother you. And some people that if they buy it for 8 and it's 750, they're panicking. So
yeah,
you have to figure out what kind of spot on the chart works for you. And if you're the guy, if you're not P and you can't buy red, you have to play the trend. And then you got to figure out if on the other side, if you are playing a trend and you get out real early and it keeps going, does that fuck with you or does the pullback fuck with you when you don't get the top? And then you learn how to scale out to adjust around that. So you do keep a little if you always want a high point, or you know how to manage the stop loss up. And it's different for everybody, but there's no wrong way to eat a Reese's, so to speak.
yeah,
And in this, what do you want to call it, thesis or this trade of silver, you're all gonna win. So calm the fuck down. I mean, if you hang out with us, you're gonna win. Calm down, stick to your plan, and just analyze the mental capital that you spent on these trades and the return on the investment because that's what's most important. And if it is taxing mentally to swing trade for you, or if it is taxing to short term trade for you, um, just keep moving on. And that's kind of the origin of the on to the next one or until it doesn't pay. You got to
yeah.
kind of find something that works for you. So silver for me, um, it's been one of the goddamn easiest trades on the planet. Just because I like to be early, and boy, were we early.
Yeah, extremely so. And I look at something like POS, and I on the when it punched through 60, I really kind of accelerated my plans to to scale out most of it, but I've kept some. And at that point, when you've made that decision to keep some, when it goes from 70 whatever to 54, you can't then have regret about what you kept because you already planned to do that. And it's not really, it's honestly not a loss because you're of the entry you had. And it's what is your reason for for keeping that. And for me, it's just kind of the geopolitical reason for ever getting into silver at all. Just wanted something, quote, real. I guess for me it was the when I first learned about I guess 1964, when quarters were had silver in them and
Mm-hmm.
everything. And then, like, getting off of that, and then basically having money, they wanted it to look and feel and weigh the same, but it in and of itself is not valuable anymore. It's just backed by the government. And there's a lot of reasons to have to trust somewhat in the full faith and credit of the U.S. or whatever. But you just kind of wanted a little piece of something else. And so I started buying physical silver before I ever got into stocks at all, just a little at a time every month and whatever. But so you think about why you originally even did any of that, and so there's still a reason to keep something like POS, which I identified as the one I want to keep, as just keep it around, and not really care that much it does here. When I'm just thinking of 10 years from now, or whatever. And if this just goes and finds equilibrium back at $40 and whatever. I mean, I'm not going to buy more, but I'll just keep what I have. So the psychological element is very important, and it's why I do have kind of a lot of separate baskets, and I like to have accounts I don't really even look at that much. It's the only way to really be an investor. I personally, I can't be an investor on the minute chart. I just don't.
Yeah.
It just doesn't work for me to check on that stuff. And I'll even I trade things I invest in, but it's in a completely different account. So I think it part of it comes down to how you organize all of this. Well, whatever you're working with. If you're just working with a little DGen account and you're playing the ER lottos and you just want to do that, or you want to just trade options the first 45 minutes of the day and then do your 401k for all your other stuff. I mean, like, all of that's fine, but you cannot. We talk about this style shift, and for a lot of those guys that's a marketing thing. They're changing their style to try to find some way to keep attention on them. But I think also you got to be wary even within yourself of hopping around different styles and figure out what it is you want to do with this. I say use the work. Nobody, myself included, can use all the work in here. But which work are you going to use, and why? And then from there you just focus on execution and doing the same thing over and over again. And if it's something that's working, you keep doing it. If it's something that's not working, don't keep doing it over and over again. And it really is that the approach is that simple. Execution usually isn't, but I think that's where people have to get to.
Yeah, so somewhere in the middle there, I was kind of reminded me to add it. I've been wanting to say it in here for a while, but so I can say it now. But I do help a lot of people um, outside of our room, just like with general investing advice. I always talk about the gym guys and stuff, but those are investors. So I mean, those that the two definitely don't cross, and the micromanagement those guys do is the parallel between them and any day trader because it's still present. They look at the count every couple of days, and as soon as they're ahead, that's theirs, and checks back and it's not theirs. And simple as I can make it for them is just write down every quarter where you're at on everything, and sometimes you're gonna have a bad quarter, so to speak, but
Yeah.
as an investor, that really doesn't matter. It's more about the using time as your friend, and how that adapts to any style is in our room is that you still have to have the not necessarily the plan, but the skill set, and that's going to lead you to longevity in those positions, and being have a repeatable process, because hold and hope is not a repeatable process, especially on shitty stocks or stocks that are in a euphoria market. And to
Yeah.
be honest, a lot of what Professor finds are the best euphoria markets on the planet. So,
Yeah.
um, and knowing, I mean, that doesn't get said in here. That
Yeah.
hey, what are you really finding? And we are finding the next euphoria. It's AI. AI ain't hitting the road for another 15 fucking years. When we first got together, it was EV. And the only one out there is Tesla, really. I mean, you see a little Polestar, you see some Rivian, but they're burning money. Ford and them
Yeah.
finally tried it. But I could list 100 other things we were looking at when we started that were just going to the moon. I mean, Rivian, or not Rivian, Neo was like, I think $30 at one point in time. But I digress there, and you could say that with any
Yeah.
sector, and it's just again that knowing what you're trading is huge, and you do pick up good investments along the way, and I've tried to add that. I don't know how Target's doing. I don't know how the all the $100 stocks are doing, but um, yeah, separating that for me. What always stands out there is people's lack of ability to separate the real from the euphoria.
Yeah, and I remember with EV that one thing, because I was pretty new when we were doing that, and it's just like it kind of, it seems like the point at which these companies um, have to make and sell a car is not going to be good for them. Like I did figure that out pretty quick
Yeah.
that that you would look at the some of the earnings reports and we joke about um, the t-shirts or rolling the truck down the hill or whatever. It that's never good, and that helped a lot in the quantum computing. Where I was like, okay, who actually has a quantum computer? That's a question like that you didn't you know um, that you can ask, but when other people start to ask it, it's it's time to get out of those for a while, and then you can go back for for round two or whatever. But yeah, I mean, separating the real, the tangible from the euphoric big idea people is always important in a sector too. I mean, particularly a new sector, and space is the same way. I mean, if there's companies that have real things going on with satellites, and when space really starts to hit its euphoria, you're going to see people talking about mining asteroids and all this crazy shit. And then there's stocks that move based on that, and but you don't really want to stick around in that. And I think some traders, they get really enamored in it's called futurism, where they like the vision of the future that this company presents to them, and they think of themselves as investing in that, and then they become a community member and a conspiracy theorist, as we talk about. So a lot of people ended up in that situation in EV for that very reason, coupled with wanting to find the next Tesla. I don't know how often you heard that, but
Yeah.
I do think that was a big thing. And there isn't or wasn't a next Tesla, and it's like that in other sectors too.
Yeah, for me, I mean, not to go too off in the weeds, but it was always about the chargers, to getting the network up. And I mean, currently
Yeah.
Tesla's still dominating that, but looking for what's going to hit the road first, in any sector at all. And yeah, I do have a. I wanted to make sure we get this in, and I think it will lead to what you were talking about before we started. But I said last few weeks. I mean, you've been the QQQ 620 guy, but
Mhm.
I've been dropping probably every other week or once a week. The SPY is scared to 700. Um, got thoughts on that?
Um, yeah, I mean and I can. It's been a while since I called this up, but I can show you on here. You know, when highest OI contracts, there isn't a single call on this thing, and I mean, normally it can kind of be like that. However, we passed the big January leap date, which always kind of clogs this thing up, and I have pages where I'll remove it, whatever. But that there isn't a 710 monthly on here um, is something to notice, and that the way that this thing is working is that the highest volume OI contracts, when I look at it every day, they just they don't really punch beyond usually $3 or $4, um, and a day out or a couple days out or whatever. So yeah, there's a lot of hesitancy there, and it to me, when I look at it in some of the other setups, particularly that kind of um, in in big tech, there's a lot of organized selling happening, and one of the big hallmarks of this kind of structured organized selling is where they kind of they'll pick off stocks, big stocks, one at a time, and you don't get the sympathy that you get in kind of a full on offsides market panic like April. And the best example I can give of that is Microsoft versus Apple. They didn't really let Apple drop with in sympathy with with Microsoft that they kept them separate, and they just target one of them. And Netflix took kind of the earliest beating here, and then you look at the AI ecosystem, Oracle. They've just been slamming trash in Oracle, but Nvidia kind of staying untouched, or AVGO staying untouched, and that. So when I talk about organized selling, I'm not just talking about, you can kind of see it on the chart too, the kind of algorithmic moves or whatever. But for me, that there's a very deliberate, moving from one to the next, and as they're doing that process, it does then make sense to me that that SPY would be very tentative to touch some of those upper levels, because then whatever plans they have to pull back some of these, they can get off sides pretty quick, because it's about, they put a lot of risk to the downside on these trades, and they're exposed while that's happening. So they're going to try to maintain control, and keep things from flipping too far the other way, I guess.
Yeah, psych levels are real. I don't know how many years or when the first time you heard me talk about psychological levels, but I'm assuming like everybody, you thought this guy's fucking crazy, but they're real, and you're seeing it now, and I really think your point is showing on the chart. You said you could see it on the chart. Well, little preview to this week's Read the Room, which I think they're public. So if you have my YouTube, yeah, you'll be able to use those. But the distribution of shares down here, you get the money flow, just more buys and sells. A lot of times you see the inflow outflow on a bar chart, red or green bar chart. It's the same thing. But you get into, yes, I read my favorite book, Volume Price Analysis by Ann Calling, this week on the plane. So get fucking ready for it, people. But you could see the distribution and accumulation on the chart. And I do think there's not panic selling right now, but there's profit taking selling right now. So we
Yeah,
are kind of in a distribution phase, and when that, if it doesn't stay equal or the pressure gets turned up, you get more sellers than buyers. You will see a bit of a pullback, and I don't think the market has much appetite for it the other way currently. It's just not good value here to put your money into SPY. So it's not them. We talked a little bit about the organized selling. Well, the organized selling in the market is just like, hey, we'll sell everything from let's say 692 to 700 and whatever. They'll just put
yeah,
an order in here. I need to get rid of 10 million shares, and that, I mean, that's for me is the organized selling that can affect the market. Um, Atlas is organized selling; those guys ain't affecting the market. And then your little, there is some smaller fish out there, like your Michael Burry would be a smaller fish. Like those guys, um, they can get things going, but they can't move the market or keep up with the wave that is the overall they,
yeah.
in my opinion. So I do think we're seeing a little bit of distribution here. I don't, and that those two words I think are better than supply and demand, because then you
Yeah.
understand the mechanics of the current market. When it's accumulating, you want to get in with them. When it's distributing, you want to get out with them, or at least be a little bit mindful of your positions. And I think you can see that on SPY. So that you brought that up, organized selling. Um,
Mhm.
it's always, I think it's always happening, P. It's just how fast do those fuckers need to get out. And right now, I don't see urgency to get out.
Yeah, no, and I think, go back to Microsoft for a minute. The where I guess the trade that completely turned the corner for me in terms of what I'm doing, building, whatever. It was just I focused on three stocks, and it was Microsoft, LLY, and United Healthcare. United Healthcare, I was out. Check the logs. I was out before the Mangione stuff and all that, and haven't really gotten back in much. Getting more interested in it now after this last earnings thing. But anyway, And then of those, LLY was the best one, but Microsoft too was extremely good for me, even though in the big picture Microsoft was pretty was pretty late. But yeah, for that one, it's another one that it dropped 12% on earnings. Well, you have to look at where we're coming from, and we're just now, um, you know, to the halfway point of that April recovery, and so you kind of go investor mode for that. But the earnings reaction, like when you read it itself, um, the the drop doesn't really match what was said, and that I was wary about this earnings cycle a couple weeks ago. I told you, like, I'm not, it's not looking too great to me. Um, and that doesn't mean to just load up on puts, because I think some of these they'll just have muted reactions, and not holding the gains is can be as bad or worse than just a big move that sustains itself. Because you can just play both sides. If you're going to get a big move, you don't care which one it is, but it needs to stay there. And there's a reason that the only ones I've looked at lately were UPS and then Deck, and Deck made its move and held it. Um, because of where it was going into it. Microsoft going into it,
Yeah.
I mean, you were going to spend 600-800 bucks on both sides, and yeah, it would have worked, but it usually doesn't. So that's kind of where why you wanted to stay away from that one. But yeah, I mean, earnings, big excuse. We got to talk sometime about the new Fed chair and kind of what your take is um, on that. And I guess the market might take a while to figure out how they feel about that guy and that agenda, or whatever. But I still think the bonds and keeping an eye on that will be important through that process too.
Yeah, you gotta give me a week to catch back up before we get into that kind of stuff.
Yeah, yeah, I know. Yeah, I'll just put it on the agenda for.
Yeah, yeah. Let's while we're there though, let's rotate right into that boring stuff.
Yeah, yeah. Um,
Oh wait. Let me wait. I forgot. I gotta say this before we go because you just talked earnings. Yeah, you did a great job identifying the earnings early on. For me, I'm always like, I guess bearish on earning plays, right? Like I'm not. I don't like to buy into earnings. I like to read the report. So
yeah,
when you said that, and I started seeing what we seen, it earnings for me has just been an opportunity to get in the better companies, and that's why
yeah,
Netflix 8081 was on the plate right away. You could probably put Microsoft in there too. It's one of those
yeah,
stocks that 3 years down the road you're fine. Yeah, you're never going to get on at the right time, or definitely can't get on at the best time on this thing. Um, but anytime's a good time when it's cheap, so to speak. So yeah, that's how. I mean, that's just how I use earnings. So appreciate you being so diligent about that, because if you were buying contracts, I wouldn't have looked at it the same way.
yeah. Real quick on question on Microsoft before we
Yep.
go on to the boring stuff. Um, I'm not a big Windows user, but it seems like the sentiment about their new operating system is not very good, and like the Copilot in particular. And I'm wondering, like, how much of that. I mean, it's like politics. If you get your political snapshot of America from Twitter, it's not really what it's like out in the world. So if you're someone who's too online, I encourage you to get out into the world. But I'm kind of just wondering, and I'll probably hit our room up about this, in your business environments. What's kind of the sentiment on Microsoft at the moment, and their whole suite of products, because it's just there's been a lot of backlash, I guess, and with them I kind of trust that they'll just figure it out. But that happened before. I mean, I remember like Windows Vista or whatever. Like, they'll just have these disastrous OS releases, and then they fix it for the next one. But I'm kind of wondering where we're at in that cycle from people.
Yeah, I mean, even if the world or America or corporate or government got off Microsoft, it would take your lifetime.
Yeah, right, right. Yeah. There's no right. You can't. I mean, we talked about that with CrowdStrike. It's even more so with
Became
Microsoft.
impossible. Yeah, it's just so
Yeah.
hard to go away.
Yep. All right. So yeah, I'll get into.
I mean, and P that FUD been there in the '90s too. Let's mention that real
Oh,
quick.
right, right. But it's cyclical, right? I mean, it flares up, and then they usually figure it out and
Yeah.
release it back
Okay.
the next
Okay. Yeah.
time. So, all right. So yeah, copper. Um, you know, had the big spike, little pullback here. Who cares? I mean, it's not really big deal. Um, I would just say, you wouldn't probably want to get back into a $5 test. You want to just find some strength around here at 575 or 550 um, or something like that. I still think entries are going to be kind of tough to come by in our familiar copper names, but you start to look to aluminum and some other metals, and just in general. I mean, I keep posting it every time I see it, but people getting on the periodic table trade now is just really comical
Yeah.
to me. There's so there's going to be some opportunities here, but we laid out in this room for you the best possible time to get into the periodic table, including copper. So, um, I just it's important to keep up with it, but I'm not really looking for entries right now on copper. I don't know what your take is on that.
Yeah. No, I mean, I guess kind of your style dependent here, but for me, I like doing the thank you trades in the hotter market, and we're just currently not that hot. Um, so yeah,
Yeah,
I mean, we have the names. I think those names are tradable on the short term basis, just because there's so much range in them at the prices they're at. But
yeah, and
not
I
for
will
me.
say,
Better fish.
even from my end, um, if it's like swinging options on something. The IV is still pretty low, even given this copper move. So there's a little more safety in swinging those, and the more important thing about that is it's cheap to hedge. So if copper does give you a day where it's down 5%, um, you can clear out some of the short term hedges and keep the longs if you want to. But yeah, so that's there too. All right, gold. These gold and silver candles. I mean, I just I'm interested more than anything. Not really interested to enter and trade, but do we go mid candle here? Uh, do we bleed out? Where does it consolidate? Gold historically likes to consolidate for fairly long periods of time. So we're in a this whole thing is unusual to begin with, and like you said, it's not necessarily um, healthy, but how sick is it? You know, if you get sick quickly and it knocks you out for a couple days, and then you feel fine after that, then we will just go mid candle on here and be boring for a while, or you know bleed out and think about testing 4200. That's those are the two scenarios I'm looking at, and I know it's say it's going to go it's going to go up or it's going to go down. It's not really what I'm saying. I'm just saying, like, where's the spot where it's going to park for a bit, and that's kind of what I'm going to be watching going forward here.
One thing kind of bothered me about traders in general is they need it all in two. Like they want it to be 1,000% their direction. Like they want to, the victory dance in the end zone. I mean, we made money on gold, and gold being up here ain't healthy for the rest of the market. You should be looking at the big picture and your
Yeah,
mentality about the rest of the market in the next trade. And gold going to 10,000, so you were fucking right, ain't going to be good for anybody. Um, so yeah, that's where my mindset is on a lot of these trades, because I don't like to get delusional conspiracy theorist or overzealous in my rightness of a trade. So yeah. I mean, I'm a fan of. You said 42. I'm more of a 38 guy, but whatever. I'm more of a fan of that actually fucking happening, to be honest.
Yeah.
So I'm going to plan that because mentally I'll be in a better space. And the same goes for silver. It's the same similar situation. We're just I don't want two things to be good. I'd rather have the other 98% be good, and this isn't helping that currently.
Yeah. I mean, right. And I guess, when the last time we had a bear market and oil was
Yeah.
way the hell up there,
Yep.
and it was like that was fun. It was great to be so right on Oxy and Marathon and all those. But when oil started to pull back, we saw how good that was for other things. So yeah, I mean that's why we stay on sectors and focus on sectors, and it's why you know I'm so focused on SAS right now, and I keep a lot of those are jabs,
Yeah.
but I keep I you know I'll know when you say the right thing, that and then I'll look a little deeper on the broader picture, because SAS in particular, they don't make anything,
Yep.
so they take these big hits. They also recover quickly because they don't have a bunch of machines to turn back on, and whatever, they're sort of um, lean and out there in the cloud, and whatever. But sentiment shifts. There is less to worry about in the recovery, so that's why I kind of get back into those. But anyway, yeah, I mean, gold getting to this spot is part of that picture. I don't think you really want it in one candle like that happened,
No.
but it happened. So where do we go from here? And we'll just keep an eye on it, and I'll just repeat the same thing for silver. We already looked at this one, but yeah, it'll
Well, I think the better topic here, P, is which one's ahead.
right.
You know what I mean on that kind of move, and silver definitely looked like the leader um, currently. Like they might have been, gold might have started the hair race at the beginning of the year, but silver's kind of leading that drive currently.
Yeah,
The
no,
torch
right.
top back up.
Absolutely.
Perfect.
And I think and I'll get one thing too about we had a very good call on gold and silver, that had a couple phases, and developed over time, over a year ago. Really started talking about that. Uh, it wasn't crowded back then. I mean,
Yeah.
they're both massive market caps globally, and whatever, from thousands of years ago to now. But just in terms of from a stock perspective, they weren't crowded. And you don't see me put out big shot calls on, when things get very crowded, because that's the opposite of what I do. And when you looked at even like guys reading option flow and all that, they want the heaviest volume, the biggest activity on the
Yeah.
shortest time frame. You
Yeah.
take everything that they like that. I do the exact opposite of that. I don't do the opposite to be different from them. I do the opposite because it's actually what works, and it's actually um, how you read flow. So
Yeah. 50,000
I don't like
contracts
that.
don't mean shit.
Right? Yeah, exactly. Right. And the short duration contracts only mean something in relation to what's already been set up. The stuff they
Yes.
don't look at. So anyway, so same thing here. I'm kind of an observer on gold and silver. I'm not looking to make any big shot calls. I just know, okay, we get here, you get enough people washed out, and then we set back up, and can get back into it.
Perfect.
All right, so then oil, uh, yeah, oil, definitely good to see, for some of the setups we're in, for it to get back into the 60s. You don't need some big surge to $80 or whatever, but yeah, love our entries there, and there's gonna be some new entries. You can tell from some of the flow I dropped, the way that you're seeing um, new names that have never been in our group before, and as closely as I look at oil, that is something to note, that there is new stuff that they're just kind of reaching out and throwing money around, and they see some setups they can move. So still a lot of opportunities there. I still think you find your favorite mega cap and your favorite large cap and your couple favorite mid caps and next everyone that's the one everyone should have in their lineup. It's like when people do fantasy football and you see percentage of leagues that start this player. Every league should have someone starting Puka Nakua, right?
Yeah.
Everyone in our room should have a piece of next. Like there's going to be ones like that, but otherwise, you can kind of find the ones that fit your style. But yeah, I do really like where oil's at the moment.
I was gonna say oil's a good place to be at if you don't like as much volatility, and then you bring in next. I just thought that was kind of.
Right, right, sure.
But I got a level, so I mean, it's always my thing on that. If I kind of give you the bottom and you can't plan for it, I can't help you.
Yeah, yeah. But yeah, I mean, like for me, Oxy and Devin, love where I bought those, and like the setup still, and then there's your cop and
Dino,
BX, and
Dino,
basically if Dino, right.
thank you.
For me, it's if I can see their office building on my drive to work, there tend to be companies I like. So,
There you go.
um,
Oh yeah, you
them
said
and
Devin too, right? Yeah, there you go. Love
yeah,
it.
Houston stuff too.
Love it.
All right, so then
Rich.
natural gas. Yeah, we're in good shape here. I mean the big spike and finding some equilibrium. Still all about the 5 to 7
Nat-
move.
natural gas spiked to $7 this week. I missed that.
Yeah, yeah, very briefly.
Six
Yeah,
seven, 6 7.
right, and the this contract switch date. You always got to be mindful of this. Natural gas did not actually drop 40% a day. Um, you would have noticed that. That's not what happened. I'll explain contract switching sometimes to people, but basically, it's kind of a little bit of a reset on the options contracts, and so the price is not really the price move is not exactly reflective of what happened there. They reorganized how they sell it basically. So anyway, the 5 to 7 thing is still where we're at on natural gas. That's what I'll say there. All right, and then
Look at him trying to.
China.
Oh, okay, I thought he was trying to put it off. Go ahead.
Oh, no. We'll talk about it. Yeah, just real quick on China. I do like kind of the stability of China for now, where they're sort of grinding this up, and it's just about picking a few names, and I think we'll just continue to do that.
I read somewhere along the week that the rotation to China because of dividends. I thought that was a crazy statement, but that's what I read. So I'll bring it here real quick.
Interesting.
Yeah,
Um,
I mean they're in the dirt, so I get that angle, but I don't get that it's China because yeah, there's some dividend stocks over there, but they're not like great, and then you're still exposed to China.
right.
I mean Dow was
Yeah.
better, Dow was better, Ford's better, stuff like that, just because of exposure.
Yeah. The dividend angle. I'm a little skeptical of for China. Let's think about
Yeah,
that.
that's why I just thought I'd mention it here. It seems weird.
Yeah, definitely is. I think. I guess the two Chinese trades. The Chinese EV getting into some new markets, especially as a retaliation to Trump. I mean that can move a few of them. Um, some of their
I mean,
AI and chip stocks, like that too, and then really just the crappy China moving like they do. There's gonna be a couple of those
well,
too.
the entire sector is oversold because we just, for lack of better terms, have a bad fucking relationship with them right now. If we have a good relationship, all those charts are 1 to 2x from here with just on the good relationship.
Yeah, right, absolutely,
Maybe
and
not
and it
bottom,
all
but the rest of them. Sorry.
and it's all the trade you're making on the Chinese stock here is all fake anyway. I mean, it's
Yeah,
not a real
yeah.
stock. It's ADR, and so sentiment's everything. So yeah, with you on that. Um, All right, so crypto. Um, yeah,
72
here we
coming in.
here we are, right? I mean,
Yeah.
we talked about this, uh, and now we're here, and so then you have to decide: do you, just follow all the meme guys, and we're going to zero or 50K or whatever, or is this a spot where we get some relief, and then what do they do with that relief? So yeah, big decision point. I know, for me, um, had kind of an interesting trade on MSTR on Friday where I was like hedged upside. It popped 5% up, and I just put my phrase out there, no hero ball through the weekend, meaning, sell most of this, hedge what you have left. And it's going to be one of those mornings where um, the hedge is going to pay for everything and then some. And you can just go ahead and stop for the week if you held an MSTR put through the weekend. Um, I might do that, honestly, but yeah, but then it's a question of kind of where we go from here. So this is, if I recall, where we kind of wanted to get to was the 70s, 72 to 77, something like that. So
Yeah,
yeah,
it's like the strip club. When you get there, you don't yell out, "Show me your titties."
yeah,
You need to give it some time and buy a drink or two. And
right, right.
I mentioned the 50 candles thing earlier in the move on the way up, and not necessarily the 50 candles here because I haven't really looked at the chart to give you an accurate time frame, but it's going to take some time here. Um, that's what we want to see.
Yeah.
It's not going to Bitcoin ain't retracing to 100. I'll put my life on that. Um, but there could be a little more downside besides 72, which is what I'm looking for. So you kind of wanted to get boring for a little bit, let the charts get oversold, and then you see something that looks good, whether it's flow or in the euphoria area.
Yeah, absolutely. And just the real brutal charts are the altcoins, and we were kind of right. I mean, that wasn't a hard read, but the idea that there wasn't going to be an alt season per se, definitely panned out. So yeah, there's a lot of despair in crypto land, but our best trades ever on like Mara and them came out of despair like that. So
Sure.
the big number here, MSTR's entire Bitcoin position going red. Um, that's the big news item. So gonna
Yeah,
see a
but
lot
it's like light red. It's not like dead
right.
red. I
Yeah.
mean, people don't understand that. Yeah, you bought it for 6 billion. It's worth 599,999 now. It's not like.
Right. Yeah. 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 Yeah.
I mean,
Right. So it's not really meaningful. And just
tell me when he's down 30%. Tell me then. Let me hear it.
right.
And then
Yeah.
I'll take that into consideration.
Yeah. Absolutely. And then the as far as the miners go, that space is more complicated now, kind of in a good way with the data centers and all that. But the big story on the miners before was just the what's kind of the keep the lights on value for Bitcoin, and that number is higher as the way Bitcoin works. So you start to think about and get to that, and I think of the big despair under when it kept flashing under 60K that last time, late 2024, that was a good spot, and we started to get back into them. So you want that, but yeah, if I just zoom in on this point in this history, that length of time and getting sort of quiet and range bound, even though it's a pretty big range, is what you want to have happen again if you do want some kind of sustained move up.
Love it.
All right, then.
You gonna do 10 year? Or we?
Yeah, going to them. Yeah, real quick on the 10 year. Yeah, 4.2. Still, still the big spot. You really wouldn't want to see this make some kind of sustained move to 4.4 or 4.5. Just Yeah, be careful. Uh, protect your neck and all that. The getting back down under 4.2, sort of slowly would be what I'd look for here in terms of if wanting good conditions to trade in.
Yeah, mark. I mean, the Wall Street, Main Street, Wall Street was pretty wild out last week. So
Yeah.
413 still my number that I got my head on, and that we're not closer to point three, to be honest, with how much stuff went on last week. It's probably a good sign. But I agree with your sentiment that that slow down and staying under 4.2 is best. And
Yeah.
yeah, I think we're early here. We just don't know the story yet. There's something up with them though. The bonds. There's going to be some
Yeah.
bond
Oh yeah.
stuff. If it's not 26, it's early 27. It'll come to fruition.
Yep. And just the dollar, real quick. Little relief bounce. You want to just be mindful if this starts to surge as well. Those usually aren't the best conditions to be in either. So got a little oversold, and it makes sense it would come back up. And then with what happened in metals, I mean, honestly, if we're doing it like what should happen, if silver dropped 30%, like yeah. I mean, this should be pushing 99 if we're looking at like if they were really connected.
Yeah.
But you're not. It's all fake. So it's this is going to kind of do what it does, but if this just gets above between 98 and 99 for a while, that's not a big deal, but you don't want drastic moves in this one either.
Yeah, no, and that again probably where we're going this week is just a little relief and all that.
Yeah.
Friday moves the pan out inside bar range on a lot of things.
Right.
Is what I mean, to be honest, what I think I'm going to see and what I hope I see. It kind of got that weekend. We kind of got that weekend war might start thing going on that we had at the beginning of last year as well too. So just mindful of Friday sell-offs, probably more protection than actual reality.
Yes, and I think you very well could see a couple wild futures candles this afternoon. So looking forward to that.
Perfect.
It's always fun. All right, that's all I got. So
ready to work?
Yeah, let's do it. I'll grab a coffee and we'll get to go.
Perfect. Like and subscribe. Link somewhere, people.